Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So markets around the world are taking a bit of a breather this morning, nothing too extreme though. In fact, Scott, you might even say this action is healthy and normal for Thanksgiving week.
Yeah, well, it seems like most people start to travel for the holidays. Everyone likes to have a good Thanksgiving turkey. Hopefully, if you're cooking a turkey, you took it out of the freezer and put it in the fridge. You gotta let it thaw out. Anyway, with that being said, feels like the market needs a little bit of time to just kind of chill, because we've had a huge move. It's been over 2 weeks since we ignited from the jobs report. You know, even recently we extended even further. So with the world markets taking a break and our markets opening up yesterday and closing off a little bit, I don't think it's anything to worry about.
All right, so if we maybe get some digestion, why don't you show us the levels that we should be watching?
Okay, well, let's take a look at the chart, and here you go. This has been an enormous move, starting from that little red dog reversal back in November 16th. Few different times we came and tested this trend line. Let's bring it up to date. This was the most recent area to navigate, that red dog reversal, and then this is what yesterday was. I heard a trader or two banging their machine yesterday, maybe a spoiled bull. But anyway, with that being said, yesterday's low is 1800. Here's your 8-day moving average. You know, we held 1775 last week right there. So with that being said, I wouldn't worry. If we close below the 1792 or something happens in that fashion, maybe the bears will try and flex their muscles a little bit. But other than that, I think yesterday was a day in stride.
Well, what about gold? Because gold did get a little bit of a bounce yesterday, and it's up a tiny bit this morning. Has anything changed there, or is it just more of the same?
I think a cat would be embarrassed if they describe it with a dead cat bounce, because that's all it's been, all year in gold. Yesterday, if you pressed the short in gold, you probably got hurt. If you looked for a reversal, you made some tactical, cute cash flow. Overall, we'll take a quick look at the chart. You'll see you did get a minor reversal, which I guess is somewhat important, especially for those who, trade gold. This is, I guess I'm just going to draw some quick lines here. Here's one of your trends. This was the low that was being, put in place in June. And remember that last little pivot, which came in around 121.50. So I would say, yeah, okay, it opened lower, closed higher, but so did our markets actually opened up and went lower. So a little divergence. If the gold bugs want to talk at all, before they're allowed to speak, I would say reclaim 122. You reclaim 122, then maybe you could start building on that, and then look what you have in front of you, all these moving averages and this downtrend. And that's a downtrend, that's not even as elevated as the other ones from up here. So at this point, I think gold has a lot to prove, and I'm just avoiding it. All
right. Well, how about high beta tech? It continues to provide us with opportunities within the group. Google put in a new high yesterday, 1053.19, continues to be best in the group.
Google made my day a little bit easier yesterday because I came in long and there was a nice little ad there. It was strong most of the day. End of the day, pulled in a little bit, but nothing to be so worried about. You look at the chart, it's been really strong. Here's that big gap up after earnings, nice consolidation, and then it held higher, made a new high. So if you traded that, if you start to position in some of it here, and then you added yesterday and took some off, you did good. At this point, let's see if it could hold now, just say above the 8-day, which is at 1,035, and perhaps in the next session or so, we get another momentum move through 1,053, because there are some out there talking about a measured move to at least 1,080 here.
Meanwhile, Apple's still hovering, but it's hanging in there. Do you think it looks poised to finally give us some action?
If it doesn't go this week, I'm telling you, Apple, I might have to change over my devices.
Or you've thrown in the towel?
Yes, no more for me. I'm going to go start buying a Samsung. I'm kidding. I'm very loyal. But at this point, let's go. Get on your game. Look at Apple here, okay? It's nice and tight. You have your chance. It's holding above this 518, 520. It's looking a little frisky, actually, for Apple lately. And it's got to get above this 526 to knock on the door of 540. If it can get above 526 and actually close strong, I think some traders on my floor would be very happy, including me.
Yeah, well, I'm sure a lot of people would be happy. How about Netflix? Has been inching higher, but is there a clear entry point here?
It's like inch by inch. You ever hear that song in high school?
No.
No.
But I can get the gist.
Netflix is not used to inches. It's usually yards. And right now, so, in Netflix, it's not the exact same type of momentum name that it's been. And if you look here, ever since that big reversal on earnings, it's been crawling, holding the trend line above the 8-day, but you can't buy a high and sell it higher, or at least it's hard to do that. So question is, can it finally happen? You have 352. If it gets above 352-ish with any kind of volume, maybe you get a move to 360, but it's not the easiest stock to be trading lately.
Well, Amazon tacked on another more than 1% yesterday to put in a new high as well. We'll have to see if it continues to get a push. What with Hanukkah, Thanksgiving, Black Friday, Cyber Monday, the list goes on.
A lot of catalysts in there, and the stock's at new highs, and it's been acting very well. I have not really been hyper-focused on this one because Amazon seems to has my ticket. Same way with my wife spending money on Amazon. But with that being said, I guess that's why it's at highs. So anyway, it went through 374.50, closed okay. Still trending. It's above all the moving averages. So if you're in this one, stay in it. Just realize that some numbers will probably be coming out at some point on Wednesday and Friday, and you might get some volatility. So trim and trail.
All right, coming up, we're going to go in the trenches with social media stocks. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some pockets of weakness within social networking. Let's start with Facebook, which dropped 3% to go as low as 44 yesterday. Does it seem as though lower prices, are still in store?
Well, yes, the bears won another fight. We broke below 45.70, but there's a war going on here, and entries and exits matter. I talked about the bullish thesis for Facebook coming in. I did a few videos on the street when the chart looked great, and now charts change. You look here at the overall pattern. Remember this cup and handle pattern? This is what we were talking about. Here's your cup, here's your descending trend line, and then it had the earnings and it gapped above, and then look at that move that it had all the way to the 54 area. And then what happened? A little bit of a topping pattern, but look where it came from. So with that being said, you have to measure your time frame. And I know yesterday, if you were on the floor, you saw that this 45.70 could have been a decent shorting area, and it was. And now if we trade below yesterday's low 44, it seems like we could get down to 42.74. At this point, it has come from 54 all the way down. So it's discounted well. If this pattern really comes into fruition, though, you could see, just say, what you do is you measure the head to the neckline. So right there, what's that, 54 to about 46, that's 8 points. 8 points brings you what? Ooh, almost down to 38. So with that being said, just know your prices and then watch how it acts at each one of those prices.
Right, good to be aware of that. How about LinkedIn? Continues to grind lower. What would you say the key levels of support are?
This one, since earnings, has been a little bit lethargic, but again, also from 90 to 250, these things are allowed to correct. Yeah. So you never want to get too ahead of yourself with these type of stocks. But overall, it's been correcting, and there could be some good opportunities in the next coming weeks or month if it does decide to find some support. Stocks come all the way down from pre-100, and it showed a little bit of a topping pattern. It's now below the moving averages. Last spot it broke was right here. And now let me just put the 200-day moving average because that could come into play. Hasn't happened in a while in this stock, so let's check it out. Let's just know where it is. So this way, we know where institutions would need to come in and support it, and that comes in at 202. So if we see more weakness in this group, 202 is a big level.
And Yelp continues to trickle lower as well. Does it look as though the 200-day could come into play with this one as well?
That would be a lot lower and cause some pain for bulls that chased it. It's like this one has a bit of a rounding top. So you look at the chart here, and you will see this just started to break below some key support. So with that being said, if you know your time frame, you know that this is something you need to get out of the way with. And hopefully you saw this engulfing bar. This engulfed this move, showing you the weakness. Then it was never able to take back a third of that. So this was hopefully your out if you've been watching it. And then if you were looking for a short, yesterday you had a nice calculated one. And then with that being said, I would say a level of support comes in right around this 51, and then the 200 days all the way down to 42.
Well, Twitter is weakening as well. It broke below its last point of reference and put in a new low at 38.80. Being as we don't have a lot to go by with this new issue, is this our new point of reference to trade around?
This is the exact point of reference. That's all you have.
Right.
You know, everything else is an opinion. You know, it came public. There was really no opportunity that day, unfortunately, because, you know, it got priced at 26 and they opened it at 45. And, you know, since then, it's just been, you know, getting battered and bruised by actual analyst downgrades because of the valuation, and rightly so. Maybe if they, you know, came out at 15 and went to 25 or something like that, it could have been better for everyone else out there besides just the investment bankers. But anyway, with that being said, here was your IPO day. Here's when it traded below that prior low. Tried to create a pivot right here, got negated. Then you had a little bit of a bear flag, and now this is your close below this recent floor. So with that being said, Brittany, you mentioned 38.80 as that point of reference. That's what it is. And if you look like this, there's nothing else out there. So you don't know where this thing's going to go. Everyone's just going to give you an opinion on where. Wait for some type of reversal pattern like this from a lower area and then see if there's commitment to it. But right now, there's no commitment to Twitter except for me and you when we tweet away.
Exactly. All right, well, let's do some quick hits. The banks continue to perform well. Citigroup put in a new high at 53.56 yesterday. That was more than a 1.5% gain. Obviously, we like to see the banks participate, but, you know, is Citi getting a little extended at this point?
Well, what's my rule? Day one, you buy. Day two, you add. Day three, you sell some. You know, I don't always follow those rules. I try to.
Right.
But anyway, with that being said, Citigroup, we talked last week kind of how it could play catch up. We saw a huge move in Bank of America, and we were looking for additional setups. You look at Citigroup, still looks good. I still think you could stick with some. You know, you look at this overall channel up here, the higher end, it just poked through. So maybe it tries to rest above 53, lets these moving averages catch up, and then it goes again. And
you mentioned Bank of America. Bank of America put in a new high at 15.98 yesterday as well. What do you think here? Can we still hang on to any of this?
Well, if it's in the drawer, keep it in the drawer.
Right.
That's something we talked about all year. If you're going to trade it, the time to get excited was that, you know, week after the jobs report, right around here. I want to show you this pattern because I'd love you to study it and write it down. On this engulfing bar, when it took back this descending trend line or channel here, that was your spot to get excited. Or right here. You know what, yesterday as it touched 16, the only reason you would get excited is if you had a lot down here and you wanted to trim and trail some. With that being said, you know, you could see some kind of digestion here, and, you know, perhaps at some point it tries to retest this area. But overall, it looks good, but I wouldn't be chasing it after 9 up days or 10.
How about VJet? Some buyers stepped in yesterday to contain the sell-off from last week. It's put in a series of higher lows. What do you think here? Can it get going again soon?
I think there's a trade here. I think as far as like re-entering for the long term, you have to be careful. But as a trader, stock just got crushed, and if you weren't in the crushing, you get to take advantage of lower prices perhaps. So if you look here at VJet, you will see this is when it changed composure around 60. And just to show you how technicals work for you, you know, here was when the stock looked really good, right? Here was your great day of the IPO, follow through, digestion above the first day, showing strength, and then boom, to finally the whole 3D group, you know, put in a little bit of a topping pattern. And then look at this move lower based on the article, on the note, whatever. So with that being said, it closed strong in a week tape yesterday, so that gives me some clues that we could see a move to, you know, maybe 42 to 45, which would be a nice trade, especially something to be thankful for over Thanksgiving.
Exactly. Well, speaking of Thanksgiving, you know, we're drawing closer to the holidays this week, so markets are bound to be a little bit quieter. What will be your strategy today?
I just think don't do too much. It's probably going to be narrow. So with that being said, there's only be a few pockets of opportunities, so you don't want to be like everywhere. No reason to be in 8, 15, 20 positions, you know, going into this week. I would say you could stick with some that you like. Hopefully you're using a tier system. Like if you've been in the banks with a lot of size, maybe you sold some yesterday or you sell some today, but you hold some. A lot of these high beta names are taking terms with nice patterns. They've been a little bit of a hold, but you've had some spots to add for extra cash flow. And then you've had some under the surface weakness. You know, the 3D stocks first, then even some of the solar names have gotten beat up. We showed you the social networking stocks that got beat up. So it's really very specific. So when it's specific, use your tactics, take your trades, and I would say don't do anything to throw yourself off this week, as this week's way too special to be with your friends and family versus being frustrated about buying and selling stocks.
And on that note, happy trading, everybody. Have a great day.